My options trading strategy has a 100% win rate, and before you guys think this is clickbait, I want you guys to listen till the end of this video because I will explain completely how it works. I'm always posting proof on my Instagram story. All these trades are taken on a live account, so I can pull any trade report that anybody wants to see to back this up. Now, what makes this so high win rate? Why is this 100% when most other traders are losing? So we're going to jump into this. I'm going to show you guys 3 examples. One example of what happens when I don't get assigned on my options, what happens when I am assigned and I have to sell calls, and one more example that I'm currently in where I have to sustain some drawdown that I'm currently in right now. So without further ado, let's jump into it. So what am I actually talking about here with such a strategy that has such a high win rate? I'm using the wheel strategy, but I am using it with a better model. Before everybody clicks away, the wheel strategy is very simple. Essentially how it works is you start by selling puts. If you get assigned the shares, you start by selling calls, and then you get offload those shares, and then you just rerun this again. So it's going to be selling puts until you get assigned shares, selling calls, and then put a little O here for offloading the shares, and then you just continuously do this. So that is the wheel strategy basically summed up. There isn't a more simple way to put it. If you aren't familiar with selling options, basically a cash secured put or a CSP position is agreeing to buy 100 or more shares of a stock, and you get paid to do that. You get paid options premium. A covered call position is just selling a call, and that means you are agreeing to sell your shares when you own 100 or more of them for a profit as well, and you get paid in options premium. Now, the best part about doing this is I've developed my own system, which makes this so high conviction and very, very strong in terms of I have never had a losing trade. Now, before I jump into this, I want to specify, because this all pertains to one thing. The stock that you are choosing matters the most. This is not 100% win rate if you are gambling on, say, like a GME type play where you're running this on GameStop, and then this stock is literally diving and being turned into a laughing stock of Wall Street. So this is one of those situations where this only works if you are choosing the right stocks, because if you're not choosing good, proper companies that actually are innovating, will still be around in the next 10 years, this strategy will not work. And I really, really need to preface that, because before we jump into my examples, I need you guys to understand if you are doing this on stocks that are not good picks, this is how you actually start taking substantial losses. You are forcing yourself into buying hundreds, possibly thousands of shares of companies that you don't actually want to own. I do this on companies that I do want to own for the long term, and this is why this works for me, and this is why it is so strong, and I have a 100% win rate technically against other traders. So how do I do this? This is going to be a step-by-step process. First things first, let's go in an example where I was not assigned shares and my cash secured put expired worthless. So the whole premise for all of these is going to be the same thing. First thing we're going to do is we don't want to be at all-time highs. As you can see, the all-time highs for FCX were around the 72 level. And we can go back and check. As you can see, yep, 72 level was where those all-time highs were at. So then what we're going to do is we're going to zoom in here. My rule for all-time highs as well is I don't want to be within 10 to 15% of those all-time highs. So as you can see, we were already trading around 15% off the all-time highs, because this is where I started selling my puts at, and this is where my CSP position was. So first things first, don't be at all-time highs. Be at least 10 to 15% off these all-time highs. Next thing you're going to want to do is find the most recent high. Now, at the time of selling this cash secured put, we were trading around this area right here, Monday, the 29th of June, making this our most recent swing high. So what's going to happen is we are going to sell a cash secured put. It has to make sense. The premium needs to make sense. So for me, in terms of premiums, I'm looking to lock in anywhere from 0.6, excuse my handwriting, to 0.8% per trade. This is my sweet spot. This is just where I am most comfortable. Obviously, the closer you get with strike, the more money you make on that premium. So you could be closing anywhere from like 1% on these trades if you're extremely aggressive. Now, I'm not extremely aggressive. I like buffer room. I like having stocks, or my cash secured puts, actually, I should say, at levels that I want to own it at. And that is the big thing here. You're only buying at levels that you want to own the stock at. So once I've identified a level that I want to own my stock at, this is where I would go to my options chain and seek to check on the premium. So in a case like this, FCX at the time of that high that was put in, This is about a 9% drop to where this cash secured put was sold at. So my rule of thumb here is your cash secured put, once you have identified a level, once you have found where that most recent high is, it has to be at least 5% from where we are trading at from the start of the week to that strike price. So if we were trading at 63.28, the cash secured put would have to be at least at this area right here. So 5% would be about $60. And for me, I went for a bigger buffer of almost 10%, and I did it all the way down at 57. So again, step 1, don't be at all-time highs. Step 2, find the most recent high and identify 5 to 10% off the most recent high. In this case, I went for about a almost 10%, let's call it, trade off the top. And this net me 0.7% on this trade. So for the amount of capital that I put up, I made 0.7% on that. For the week, by the way, I only deal in weekly positions, unless we want to get technical with it. With calls, I will extend that time out, but for selling cash secured puts, I'm almost religiously doing that just on a weekly basis. So step 3, find that most recent high, find where you want to own it at. In this case, I wanted to own it at 57. And then we're going to identify where we are, if we are at least 5% away from current trading price. And in a case like this, we were. That is awesome. So this is where this trade made sense for me. This is where I sold the put at. And as you can see, we kind of bounced right off it. But why? What was my final level of confirmation? I want to be entering at a key level of support, either in between or at. Now, at a time like this, before we shot through these support levels, these are resistance levels now, but these were support levels before. So these were obviously green. So we were right between two support levels. We have this one right here at 55, and we have this one at 60. So if we ripped through these levels and continued down, we had this support level right at the lows to come and save the day. Now, the last layer of confirmation that I love, and this is more of an extra layer, is this 200-day SMA. This tells me if the bigger bullish bias trend is still intact. If we are trading above it, that bullish bias is still intact, which we love. If we are trading below it, this may indicate that we are no longer holding that bullish bias, and the fundamentals for this trade has to be rock solid. So if I'm taking a trade underneath this 200-day SMA, you can see this line here. Oh my gosh, we're only back in 2025 last time here, but obviously this moves. But if I was taking a trade underneath the 200-day SMA, this is where my fundamentals would have to be rock solid, because that overall bullish trend is not intact at that time. So for me, the last layer of confirmation is that 200-day SMA. That is just the final layer of, can this hold that overall bullish trend? So in a case like this, we're good to go. This is awesome. To me, this would be an A+ setup. We are not at all-time highs. We have a 10% discount from where price was trading at. We also have a support levels right here. We're trading in between. And finally, we are trading above this 200-day SMA. So all this together gives me an A+ setup for selling a put on. Now, the best part about this is we came all the way down. This is where Monday. So this is actually where correction. This is where I would have sold the put at, specifically because this is Monday and this is Wednesday. So what happened is we came all the way down, bounced right off where my strike price was, absolutely beautifully. You can even see my indicator tagging oversold at this area, and we didn't even come and touch this support level. So for me, this is a beautiful example of properly selling a put. So with this specifically, I did not get assigned these shares. You can see that this was on Wednesday. This is where we would have started the trade at on Monday, and then where's Friday? Friday is right here. So we would have had to stay at or below this level to assign me my shares. We did not do that. We did not get assigned the shares on this. We bounced right off this area and moved back up. So what does this mean? We are out of the money, or OTM, out of the money. Now, what this means is I sold the put here. It expired out of the money, which means I just kept the premium. So in 1 week's time, I made 0.7% on the capital that I put up without owning any shares. So really take that in. I didn't touch any of these shares, but I made a 0.7% trade on this stock. And remember, I'm doing this on 5 to 10 plus stocks every single week. So this really does add up quickly. This is how I'm consistently doing 3 to 5% per month on a live account. So really take in that I'm using the stocks that I'm not owning to make myself more money without ever touching the shares. And I'm doing 3 to 5% per month doing this. I have all the proof to back it up. I post this all all the time on my Instagram story of how I'm doing, all the progress. I break down every single trade that I am taking, and then breaking it down through the week to see how we are performing. And then obviously I redo it all again next week. So if you guys aren't following my Instagram, go take a look right now, go give it a follow. But overall, this is a great example of not getting assigned any shares. So I just walked away making a few $100s on this trade for the week, literally without touching anything. And again, I'm doing this on 5 to 10 stocks every single week. So this adds up extremely well, and that's how I'm hitting these 3 to 5% months. Now let's move into an example where I was assigned the shares. Now this is probably one of my favorite examples because the fundamentals made so much sense to me, and this was such a boring pick that nobody wanted at the time. Now this is Best Buy. Best Buy as a whole, you can see from these highs right here, when I got the shares, I was at a 34% discount. Take that in from this level right here, those shares. This isn't even the all-time highs. Like, we're peaking on Best Buy all the way at $141 a share, and I'm picking it up all the way down here at $56 a share. Now, in a case like this, this is where the fundamentals really needed to matter because of this trade. So I'm not going to go too deep into the fundamentals of the stocks that I am doing this. I'm showing you more from a technical perspective because obviously the fundamentals have to be rock solid on your part. Obviously you guys have to do your own due diligence. This is where you guys need to, actually do the work versus myself. Like, I'm doing all the work myself as well. So I'm going to give you the vehicle as to how to trade these, but you guys need to do your own fundamentals and DD. So Best Buy as a whole, way off all-time highs. We were totally fine. In looking at that. And this was, I would attribute this to just right place, right time, because as you can see, step one, we're not at all-time highs. Step two, find the most recent high. So this was the most recent high at $60, whereas Friday was over here, and this is where we got assigned the shares, which was hilarious. Our strike price was at $56. And so we can see step one, not at all-time highs. Step two, let's check. My strike price was almost 7%, but 6.8% off the most recent high. So step two, obviously you have to be at least 5% or more away from the most recent high. Now, in doing this, this was a good spot at the time. As you can see, we were, downtrending, but this was me positioning myself before a bigger move. Step three, this was a key level of support. You can see the green line right here under my shares. So this was at a level of support, and you can see how this perfectly held on, and we just rallied off of this right there. But very key, I want to point out that we are below this 200-day SMA. This means my fundamentals had to be rock solid to be entering in this trade because the bullish trend is no longer intact. You can see that we broke below it, and now we are in a bearish trend. We did not reclaim that until after this move had done. So step one, not all-time highs. Step two, find the most recent high. Make sure we are at least 5 to 10% off that most recent high. Perfect. Step three, using our cash secured put at an area of a level of support. Perfect. Step four, ask for confirmation, trading above the 200-day SMA. We were not at the time. So your fundamentals have to be rock solid, which to me, they were at the time. I had my own thesis. I had my own bias. This is why I did this. As you can see, I grabbed these shares, and these shares ran about 35% to where I sold them to. So the best part about this is I identified where I would want to sell it. I use my own indicator, so you can see it says overbought here. So this is a level where I'm like, hey, this is where we could see pullback from. So I'm going to sell just kind of before that. So what did I do here? This is where I sold a call at this most recent high. So there's one right here. I'll put covered call so you guys can see this. And then there was one covered call here where we actually got the shares called away. So what does this mean? So at this point, if you sold one contract of Best Buy, you are going to buy 100 shares at a $56 strike. So which means 56 times 100 is going to be $5,600. So let's say you made 1% on this trade with this strike for argument's sake. So you made $56 right here. Now, what's going to happen the week after that is I'm going to sell a covered call. So we sold the cash secured put. We got to sign the shares here. So this is where the shares are now. Now we're going to switch to selling covered calls. Covered calls basically means the inverse of a cash secured put, which is choose a level that you want to sell at, get paid options premium for making that agreement. And then if you come at and stay above this, when your expiration is, your shares get called away. So if you had, 100 shares of this, you can sell one contract. If you had 200 shares of Best Buy, you can sell 2 contracts, so on and so forth. So in a case like this, I have to go back and check what the premium actually was for this, but since we were going to be in the money very quickly on this, the options premium would have been a lot higher than $56. So let's assume maybe it's double and we're making about $110 for selling this call right here. So now this is where it gets good because you're using these shares to make more money. As you can see, Best Buy rallied extremely hard from this level right here all the way up to this covered call, which is about 21%. But we expired before this covered call came into play. So Thursday, Friday is right here. Let's see, I'll mark it out for you guys so you can see it. So Monday, Tuesday, Wednesday, Thursday, Friday. So Best Buy expired right here. This covered call would have expired right here. So this means, look, we did not reach this $68 level. We came all the way to about 62 and the shares are at 56, but we expired worthless, meaning this covered call didn't do anything. So this is where we sell another one, but this time we are a lot closer to this level. So 22% from there, and we're about 35%. So in the meantime, now we have rallied from where we are at now. So now we only have about 22% to go. So this is where I'm going to sell another call. So once this level has finished, we're going to see where our next call will be sold at. So this is where I sold at this 76 level because I said, you know what, where would I be happy selling the shares? And this is a very big thing. You have to be okay letting these shares go. You're going to have predefined prices where you're like, hey, like this is where I agree to sell these shares. Because if people are selling calls way too low, if you're selling a call right here and you're saying, well, the premium was really good right here, this is why I'm going to sell it right here, and then you miss this massive move to the upside, you are going to be so pissed. And this is what a lot of traders miss. You can't be getting caught by the premiums. You have to understand, you have to show your levels where you would actually want to sell the stock or buy the stock at. That is so important. That is the only reason why this actually works so profitably in the long term. You have to predefine these levels, understand where you can actually sell this. I'll give you guys an example super quickly on Dell. I was holding Dell shares all the way down from the 135 level. I sold at about 260, which was about a 90% gain, and I left all of this on the table. But I was happy because I already hit the level that I wanted. We already slammed that. So for me, that was a winning trade. There's nothing to be upset over. You know, if I had the conviction and I did the research, I could have held all the way to the upside. But in a case like this, we expired again here, and then I chose to sell a covered call at the $76 level attached to this high, and you can see we tagged oversold at this area. So for me, understanding where a good TP is makes all the difference. So again, let's pretend that you made 110 here. Now these shares are way in profit, so you're probably going to make even more money on the next covered call. So let's say this made you around $200 for selling this covered call. Again, these amounts are tied directly to when you're selling it. This is what you're making an options premium. This does not have anything to do with your share price. So in a case like this, this is where these shares got called away. We came to this level right here and we expired above it. We ended the week right here. And this is where the trade expired in the money. So instead of out of the money, we're now in the money, which means we're above this covered call position, which says, hey, you know what? We agreed to sell the shares at this area. So now I want you guys to understand something really cool here. So now we're up 35% on those shares alone. So this is aside from the covered call and the cashier puts that we sold. We're up 35%, which equates to about, what is that? 1,960, 196. Drawing on the trackpad is horrendous. This is just in share gains alone. Okay, so now we can add all of this together, and we're doing this for one contract, by the way. So let's remember that. But I think I did this with about 3, so I'll show you guys the math separately. And again, this example is not like the first one. The first example was we never got assigned the shares; it just went away. So we just collected the options premium. So in this example right here, this is where we used the cashier put, got assigned the shares, used covered calls to exit the trade, and made stock gains on it. So let's add this all together. So you made $56 right here for selling the initial trade. You made about 1% on that, which is awesome. Next, you sold your first covered call for about $110, and then you sold your second covered call for $200. And then overall your share gain was about 1960, which equates to a 2, 3, 2, 6. So this trade alone, in the span of, let's check, this is where we entered, in about 14 days, so 2 weeks, you made $2,326. Pardon my French there. And so remember, this $56 level, you buy 100 shares at. So it's going to be $5,600 at this area. And we're going to divide that. Actually, we're going to divide 2326 divided by that 5,600. That is I'll show you. This is a 41%. 41% gain. So you made 41% on this trade in 2 weeks. God forbid that was your entire account size. You just made 41% on one trade, and almost 50% of your account from this one trade alone. So again, you needed $5,600 to make this trade, and you just made $2,320 on this trade, which is phenomenal. So now in a case like me where I'm working with a lot more capital, everything here is multiplied by 3. So this 56 is multiplied by 3, which is going to give me about $168. This 110 times 3 is going to be 330. And this 200 here would be around 600, because everything here is just multiplied by 3. So if you're working with one contract, this is how much you're making. If you're working with 3 contracts, this is what we're calculating right now. So that 168 from down here, plus that $330 from here, plus the $600 up here is going to be $1,098. We'll just call it $1,100 for the sake of adding everything here. Now the share gain is what makes the most difference here. So that 1960 here, we're going to multiply by that by 3, is $5,800. So this multiplied by 3 is $5,800, plus the $1,100 from premiums. This is $6,980 you made on this position as a whole. So remember, for this $56 that we're putting up, multiply that by 3. So instead of $5,600, this is going to be $16,800. So in the first case, you put up $5,600 to make $2,300. In the second case, you're putting up about almost $17,000, but you're making almost $7,000. So this is a game of scaling. The more money you have, the more money you can make. Now, this is probably a case where this was, very much stars aligning. This is probably one of the only cases, and that's why I've picked it, where I saw such a sharp gain so quickly on this trade, and getting paid for obviously options premiums. Now, this is awesome. This is a great example of, how you can actually use these. Because my swing trading strategy is very close to my option selling strategy. So you can almost use options to get into swing trades. But the thing is, there are times where you can be on the losing end. And that is what I want to show you guys right after this. So let's take a look at this winning example really quickly before I get into the loser. So the winning example, this is the best case scenario where you get assigned shares. We have a huge rally and you use a covered call to get rid of your shares, because all this means is you got paid to enter this trade, you got paid while you were in it, and you got paid to exit it with a 35% stock gain. So that is phenomenal. So now let's go and take a look at a loser that I am currently in. So IREN, this is a stock I love running cash secured puts on just because the premium is so high. I love the stock. Overall, I'm bullish on this. As you guys know, not financial advice. This is obviously just my opinion. But I sold my shares, or I sold a cash secured put right at this level at the $47 mark. Now, as per the most previous high, $63 being that high, this would mean about 25% down to this level. And you can see when this week started, where is it here? So Monday this week. So when we open Monday from the high to where I got to sign the shares at, this is a 17% discount. So when I entered this trade, obviously step 1, we're not at all-time highs. Step 2, find the most recent high. We have to be at least 5 to 10% away. And from where we start selling, the position has to be about 5 to 10% away to the strike price. in between two levels of support. So here's our two levels of support, and I chose to sell the put right here. We actually did end up getting assigned these shares, but we got this at a 17% discount. So I want you to take this in. Everybody that is buying IREN through here, just being like, oh, like I want to invest in IREN, I'm going to put some money into IREN, putting it in here is immediately down 17%. So not only am I in at a big discount, I'm also getting paid to enter this trade. So if I'm running, depends how many contracts I'm running. If I made 0.8%, 1%, I'm making enough money on this to lower my effective cost basis, and getting paid to be in this trade in general. So now, as you can see, these shares have tumbled. As of where we're at right now, we're sitting at about a 25% loss right now. That is not good, right? Everyone's freaking out. Key also as well here is we're below the 200-day SMA. Before we were above it, and this is where I sold my strike at right here. Or sorry, this is where I sold my category put at. This is where the strike was, and you can see that we were still above the 200-day SMA, meaning that bullish trend was still intact. Now, obviously, we are below it. The fundamentals have to carry even more at this point. So in a case like this, I'm selling covered calls. I think mine's at like $50 right now. And I'll show you guys something really cool. I'm just going to put this in here so you guys can actually see. Covered call. So now the cool thing is I sold my first set of calls as soon as this next week opens. So Monday right here, this is where I sold the next set of calls. So I got paid while holding these shares again. Now we expired down here. That sucks. Friday, as you can see, down here is where we would have expired. And again, we kind of rallied just a little bit. And then now we've come back down. But now being a new week, I sold another set of calls. And then a new week after that, I'm selling another set of calls. So I understand that this stock is going down right now, but I'm not concerned because while my open P&L is doing something like this, what I'm doing is I'm using in the background here, I'm using these shares to generate myself small amounts of income. So while it might not look like a lot right now, once we come back to this level, and then start trading above it, this is where the premiums right at this point right here, this is where the premiums get even bigger. So right all the way down here is going to be like kind of whatever premiums. I'm using time to my advantage to make the premiums better. So instead of selling like weekly calls, I'm selling 2-week calls because this makes the premiums even better. So in a case like this, this is where we wait. We use the shares to generate more income. And then once we're back above our strike price, where our cost basis is, our shares, this is where I will sell a bigger call where I will make more money, and then I can offload the shares at a higher price. Now, the key thing here, like I said, this is my open P&L right now. It's just going down. In the background, I'm using those shares to generate more income because by the time this comes back to where the break even was, the income that I've generated on top of this has now surpassed. So now, even if I exit this trade at break even, merely if I exit this trade at break even, I've already made even more money using these shares. So again, this is where your conviction, and your due diligence needs to come into play because even my indicators tagging oversold, we're still dipping below this level. So this is where your due diligence needs to make the most sense. If you don't love a stock, if you don't want to own shares, if you're not able to sustain this kind of drawdown where you're like, no, like I genuinely cannot handle being sitting 25% in drawdown, this is where you lose. This is where your emotions kick in and you sell the shares and then you actually exit at a loss. For me, I'm comfortable because I believe in this stock. Even analyst ratings were just upgraded on this stock. We're sitting at $83, which is 136% from where we're trading at now. So if I held from this level all the way to, what was it? It was $83. Let's find that right now. I can't even see that yet on the screen. So from here to the analyst ratings is about 75% in share gains. So we'll see how this obviously plays out. Maybe I just hold until my all-time highs. I do like holding just till all-time highs and exiting, not so much analyst ratings as much. But this is where you have a lot of room now. So as this kind of goes down, if this did continue down, I do it in a ladder movement of about 5 to 10%. So if it dumps another 5%, I'll move this 5%. Dumps another 5%, I'll move this 5%. If it comes up 5%, I'll move this up 5%. If it comes up again 5%, I'll move this up 5%. And I'll do this up until I'm satisfied to the point where I'm like, hey, this is where I want to actually offload the shares. And then say that was at the $63 mark. This is where I would just leave this and continuously sell calls at this area until we expire above this area. So that is all 3 examples. These are the really only 3 things that can happen. There are much more complicated ways to play this strategy. This is just how I've learned it. This is how I prefer to play it. Here's a obviously amazing example of how this can actually play out. But overall, this is why this has a 100% win rate, because you've defined every single outcome already. So merely you are just getting paid to be in trade, out of trade, not in a trade. So this is exactly what I do. This is how I return 3 to 5% every single month. This is a very complicated strategy the way I do it, sometimes, but the wheel strategy is a very simple strategy overall that I would encourage everybody to learn, because while day trading might be, get rich quick, this is a way of wealth building. This is how you use shares to work for you. This is how you structure these trades so much better than, the average person just buying and selling at random points. So I can start making some more videos on this stuff for you guys, but if you guys have any questions, leave it in the comment section. Feel free to hit me on Instagram at CYRN Siren. I know, OG username, so awesome. But yeah, if you guys have any questions that I can't address in the comment section, feel free to hit my DMs. I'm very happy to just get into a conversation with you guys and explain this stuff. So with that, we'll see you guys in the next one.